And so cash is going up. I gotta turn my pen back. And then what else is happening?
Put stockholders' equity.
Yep.
10,000 under.
Yep. And specifically, you could go ahead and then say common stock.
Credit.
If you didn't do that, then that's okay. $10,000. Okay, what about B? We borrowed $17,000 cash from the bank and signed a note to pay later. Or I'm sorry, $7,000. I don't know where I came up with 17. $7,000. Okay, plus 7.
Well, would liabilities be plus 7 since that's the credit side?
It would be. Yeah, it would be. Liabilities would be going up, so it would be notes payable plus 7. Now, if you just had liabilities, that's fine, but we were also trying to see if we could know what the account was as well. But if you just had liabilities as plus, then that's okay. All right. We bought and received $800 of equipment on account.
All under asset and then the minor.
So equipment 800, okay. And then what else would be going on?
Minus 800 cash.
Okay, for cash. Okay, what about this word right here? Yep. So accounts payable plus 800. That's all right. That happens a lot.
Oh, on the account.
Yep.
I got you.
Yep.
Okay.
All right. Now we purchased land for $12,000, paying $1,000 in cash, and then signing a note for $11,000.
Land plus 12 and cash minus 1,000 under asset.
Yep. Plus 12.
And then accounts payable 11,000 under liability.
I just wrote, try that, 1,000, right? And then under liability, notes payable, yep, 11,000.
And it's notes because it's long term. Right?
Yep, exactly, yep. And then the last one, we purchased $3,000 of equipment, paying $1,000 cash and charging the rest.
So I did. Equipment was plus 3,000, and then on the same side minus 1,000 cash,
Yep,
and then I guess they charge the rest on the account. So then under liability, accounts payable.
yep, accounts payable plus 2,000. Yep. Oh, okay, never mind. That was. Do you guys still see mine, or did I blank my screen out?
You blanked it.
Oh, did you get it written down?
Yeah.
I think I
This
can.
one was 80 plus 2,000.
Yes. Yep. Yep. Okay. Because I think I can pull it back up. Okay. But if you got that, then hopefully you guys got that written down. So now I am going to blank my copy too. So now let's take what you guys just have written down, and now we're going to disregard what's on here as this, and we're going to do the journal entries. So if I wanted to write the journal entry for received $10,000 cash and issued stock, I would debit what? What account would I debit for that one? Received 10,000 cash.
You would debit the 10,000 cash.
Yep, I would debit cash for 10,000, and I would credit
Stockholders' equity.
Well, stockholders' equity is the title, so I would actually credit common stock. because stockholders' equity is kind of like assets, right? You can't, so. All right. All right, what about B? I borrowed $7,000 cash from the bank and I signed a note. So I'm gonna debit. I got the cash, right? The easy part of these is the numbers, right? 7,000, what's my credit?
The 7,000 under the CR.
Right, what account?
Oh, I'm sorry, the notes payable.
Notes payable. All right, and then we bought and received $800 of equipment. So on that one, we're going to debit $800 to what account? Because we got the numbers. Equipment, and we're going to credit accounts payable. And then we purchased land for $12,000, paying $1,000 cash and signing a note for $11,000. So we're going to debit. And always think about, what did we get? We got land, right? So we got land for $12,000. What are we going to credit?
Do we need to credit the cash?
Yep.
As well as the 11,000?
Yep. Cash for 1 and 11,000 for, and that was a note payable, wasn't notes payable. All right. And then I'm running out a little bit of room, so I'm going to go over on the side for the last one. We purchased equipment for $3,000, paid at $1,000 in cash, and charged the rest. So I'm going to debit equipment $3,000, and I'm going to credit
Cash for 1,000.
and
The 2,000, and that was accounts payable.
accounts payable. So see, we're going to move away from the increase decrease that we did first and only do the debit credit. So you want to ask yourself, what did I get? What did I spend? Always look for the cash, right? Because in the first two, we received cash. So if we received cash, we know we debited it. If we received land or received equipment, then we know we debited that. So look for what you know. The dollar amount should be pretty easy right now. So you shouldn't have to do much calculation. So those should be pretty easy to plug into your debit and credit in your homework. All right, and I think, whoops, get my mouse back over here. Yeah. All right, and then the last thing I'm not gonna the last thing we would have talked about was the trial balance. It is pretty self-explanatory for you to look that up, and then the current ratio. So someone asked the good question at the start of class about what do we have to know and not have to know if we don't cover it. You do want to take a look at the trial balance for Chapter 2, and current ratio is an important ratio, and I do believe there's a homework question on that. I do want to end on a good, easier question, so we're all feeling confident before we get out of here. So go back to handout 1. Or handout 1, the handouts for Chapter 1. I can't talk. And go to page 7, and it looks like this. And let's go through and let's mark. You're going to mark what statement those items go on. And then raise your hand when you're done. All right, so let's go through it. Okay, so the amount of cash paid for equipment. What statement do we think that would go on?
Income statement.
The income statement? What else we got? This one's tricky.
Statement of cash flow.
Oh, you got it. Usually it takes longer. It is a statement of cash flows. All right. The reason is it's specifically talking about only the amount of cash paid for equipment. So it's a statement of cash flows. All right. What about cash? Where's cash go?
Income statement.
No. Balance sheet. And it's an asset. I'm going to help you along too. So it's an asset. A's for asset. What about notes payable? Balance sheet. And what is it? Liability. What about common stock? Where does it go?
Okay, the balance sheet and
Statement of retained earnings.
No, just the balance sheet, stockholders' equity. There is something that goes on both, but it's not that guy. Common stock is just on the balance sheet. What about supplies?
Balance sheet.
Balance sheet, it's an asset. What about the amount of cash collected from customers?
Income statement.
Nope.
Statement of cash flow.
Statement of cash flows. Yep, that's an operating activity. Yep, sorry, way over on the right, yeah. And then this one is investing activities. All right, what about accounts receivable? Balance sheet, it's an asset. What about notes payable again?
Balance sheet.
Yeah.
Liability.
Yeah. What about salary and wages expense?
Income statement.
That is your income statement, yes. What about equipment? Balance sheet, and it's an asset. What about dividends paid to stockholders?
Is that one the statement of retained earnings?
That's on the statement of retained earnings, yep. And what about net income? This can go on too.
Income statement.
Income statement. And then I think someone said it. What's the other one? Yep, statement of retained earnings. So if you notice, if you had to guess a statement for something to go on, what statement would you guess?
Balance sheet.
The balance sheet, yes. There are only, even though technically 3, but the income statement has revenue and expenses. And they literally say revenue or expenses. Those are the only 2 things that go on the income statement. On the statement of retained earnings, you have beginning retained earnings plus net income minus dividends. So 3 things: retained earnings, net income, and dividends. That's it. And then on the statement of cash flows, it has to be cash. Otherwise, it doesn't go on there. Everything else goes on the balance sheet. So it's pretty specific on what goes on the other statements. Revenue and expenses, income statement. Beginning retained earnings, net income, dividends, statement of retained earnings. And cash goes on the statement of cash flows. Everything else goes on the balance sheet. All right, so